My name is Itzhak Ben David. People call me oftentimes Zahi. I'm a professor at we call it the Ohio State University in Ohio. My area of research is financial markets at large. I specialize at different types of securities. So today we're going to talk about ETFs. But I have also some work on corporate finance, financial crisis of 2008, and quite a bit of behavioral finance. ETFs are a way for investors to invest in a portfolio of securities. Instead of in a single stock or single bond, they can invest actually in a portfolio that is based around, say, an index. And the index could be something like the generalized index of the stock market, the S&P 500, or it could be an index defined on a smaller set of stocks. So these could be the group of stocks that specialize in clean energy, for example, or under some theme. These could be firms where their CEOs supported President-elect Trump, for example. So you have these kind of ETFs. In recent years, in the last couple of years, ETFs related both to Bitcoin and artificial intelligence have been launched and have been very popular. They were first launched in 1993. They became popular because they were good alternatives to other types of portfolio investments like mutual funds or closed-end funds and other type of funds. They have advantage in their liquidity. The ETFs, you could actually trade them within the day. You could get an instant price at any point. Also, it's relatively cheap to launch a new ETF. So this made many more ETFs just being available to the public. And I guess it's also the rise of retail investing, so people using online services and more speculation in the market basically made them very, very popular among retail investors. Broad-based in ETFs, we think about those as ETFs that follow an index with many constituents. Think about the S&P 500, the Russell 2000, has 2,000 stocks, Russell 1000, Dow Jones. I mean, these are indices that include many stocks. Their aim is to replicate the broad economy broadly, or big segments of the broad economy. Specialized ETFs, as their name indicates, specialize in a particular area. It could be a specific industry. It could be the energy industry. It could be utilities, financial sector, or it could even go to a narrower definition. For example, firms that manufacture drones, firms that have trade connections with Europe. And these narrower definitions are supposed to give investors the ability to have a specific exposure to these areas, these specified definitions, basically. So if you would like to have some exposure to the US market, for example, you could buy an ETF of European firms that actually sell to the US market, for example. Now, these ETFs, the specialized ones, what we found in our research, are being launched because there is demand for these specialized area. So in the last couple of years, there were many ETFs issued related to Bitcoin, related to artificial intelligence, and you could see where this comes from. There is a lot of expectations for these type of assets to perform really well. Now, think about what the process that is going on in the financial system. There are issuers of these ETFs. These are financial institutions that would like to make money. And they are basically scanning the market for opportunities to launch new products. They see that there is a lot of demand in a particular field, Bitcoin or artificial intelligence in this case. And then they issue these ETFs. Now, when they issue the ETF, these ETFs tend to be overpriced, because by the time that the financial institution delivers the ETFs to the market, it probably takes about 6 months from the beginning of just the drawing board, putting together the legal documents, submitting it to the Securities Commission in the respective country. So it takes 6, maybe even 9 months. And by then, the market tends, not always, but on average, tends to be frothier in these areas because there is a lot of demand, right? So what we find in our research that actually the launch of ETFs is kind of an indicator for overvaluation of the specific niche. So in a way, there is too much speculative activity around the time of the launch. So specialized ETFs underperform after their launch. In general, they don't underperform. So if you look at an ETF, a specialized ETF that has been around for many years, it's going to be okay. But around the time of the launch, in the first few years, they underperform because they are being launched when the market is really high at this specific niche. So my advice is to short them when they are being launched. Don't buy them, but rather go short. ETFs basically attract new demand to the market. Without ETFs, you would assume that some investors wouldn't actually enter. In a way, they kind of lower the bar of entry because they are so liquid, so easy to invest in. Oftentimes, they have catchy names. So it's almost like a product that makes investment in the market more accessible to just the average person. And many people get advantage of this and started investing in the stock market. Now, what happens then is that there are these investors basically generate some demand that kind of basically shocking the ETF. Basically, there is suddenly a lot of demand because maybe someone said something on Twitter or something. And this, by buying the ETF, basically this shock goes to the securities that are being held by the ETF because the ETF needs to buy these securities. So in a way, ETFs transmits shocks from outside the stock market into stocks. Now, should we be concerned? It makes security prices less informative. It increases their volatility, how they move. So it means that they're just noisier in a way. You could have really good days, really bad days. Yeah, it's not desirable by investors, but it seems like just a consequence of this investment tool. If I knew, I wouldn't be here. I would be on Wall Street. But you see, there are many issuers of ETFs, and they try to innovate and bring new ideas to the table because it's all about new products. Oftentimes I compare it to yogurts. When you go to the supermarket, there are many types of yogurts, and you as a consumer, you're looking for the new types or this one that looks really appealing. And there is a competition between the producers of the yogurts to bring to the market the more and more appealing products. The recent trend has been actively managed ETFs. So basically, these are ETFs that change their composition more often. So this has been very profitable, profitable especially to the issuers, but very popular. We see more related to crypto. My guess is that, well, we'll see. There will be other hypes. Now there is AI. It's difficult to, if I knew what the hype is, I probably wouldn't stand here, but open a hedge fund.